How's it going, everybody? It's Stas here. Hope you guys had a great weekend and are ready to get back into it. I for sure am, and in today's video, we're going to break down my game plan for this upcoming week, stocks I'm looking at, earnings reports I'm keeping my eyes on. So if you guys find value, hit the like button, subscribe, check out my Patreon down below if you want all my real-time buys, sells, call-outs, morning update videos, plus more. And you guys can get 50 free bucks from M1 Finance by using my link, depositing $100, and we each get 50 bucks free. It's that easy. All of those are linked down below. And with that being said, let's get right into the video. So the markets last week, they were a bit rocky, volatile, right? But Friday was a pretty great day. We can see on Friday the Dow went up 0.5%, the S&P went up 0.75%, the Russell, let's see what the Russell did. Where is that? It's not showing it for some reason. I don't know why, but the NASDAQ 100 went up over 1%. And what we're noticing here on the 10-day, 30-minute chart, which I drew this wedge out last week, and I told you all I was looking for direction, what we're seeing is Friday, it seems like we ended up picking direction. We actually broke out of the resistance of the wedge. We're trading above both moving averages, and now we're pretty much breaking out. And I believe if 468 does break out, break on SPY, which is why I have my alert set right there right now, then we're probably going to start testing 470, and maybe, just maybe, we break those highs and we hit all-time highs again. So set your alert at 468. Draw out this wedge on your 10-day charts, guys. Very important. And it's the same thing for QQQ, which tracks the NASDAQ 100, right? This one ended up breaking out of both moving averages and the top of the wedge on Friday. Let me actually redraw this because it does look a little bit sloppy. Let me show you guys what I'm talking about. You can see we broke the wedge above both moving averages, but we're still trading under the lows, or the highs rather, from, I believe this was on Wednesday at 395, which is why I have my alert at 395. So if we do break that point, guys, that is where I'm seeing the next huge breakout on triple Q, maybe back towards 399, 400, dare I say, we break all-time highs or hit new all-time highs. So that's kind of in a nutshell, very quickly, what I'm looking at for this upcoming week when it comes to the overall markets. And did you guys see the VIX on Friday? The volatility and the fear index? This got destroyed. The VIX went down about 8%. So now that the volatility index is dying down, it looks like we want to go to the lows of 14, maybe 15 points. That could be a sign that we are slowly going to break out here again, which we already are seeing signs of the beginning stages of that on the 10-day chart for both SPY and QQQ. And when you guys are watching this video, the futures market is going to be open. So let me know in the comments, are the futures green, red, for whatever it's worth? Let me know, because we all know they can flip-flop overnight, but I still like tracking them and seeing whether or not we're red or green on Sunday night. So let me know in the comments. Make sure you guys smash the like button if you are finding value in this video thus far. And with that being said, let's talk about some stocks. So we have a lot of stocks this week reporting earnings, some of them large caps, some of them not that big, but still they're worth talking about. And even though we've seen all the big tech names report, you know, all the juicy names have reported already for the most part, we still have to talk about these companies because they're also very important, and quite frankly, some of these are very large companies as well, and some of the most important companies that are in this world that we're living in. So number one, which I wouldn't say this one's extremely important, but I'm watching out for, is Lucid, ticker symbol LCID. And look at my analysis on this from a couple of weeks ago, guys. I think I did this analysis, 2-3 weeks ago towards the end of October. This played out beautifully. Even though I didn't take the trade, it played out exactly like we were talking about 2 weeks ago. You guys can see this was in an ascending triangle. It was pretty much trading within that triangle in the pretty much all of October into the end of October. And then I told you guys, if 28 breaks, we're going to see a breakout. Now, did I think it was going to go all the way to almost 50 bucks? Nope, I didn't think that, but it ended up doing that. You guys can see the ascending triangle played out. We ripped all the way to 50, and now we have earnings coming up on the 15th. That's tomorrow. And let me see, is that after hours or what? Yeah, it's after market hours tomorrow, being Monday. And even though this is very overbought at this point, it's pretty much, actually, geez, guys, it's more than doubled. I mean, this was a $15 stock just about 2.5 months ago, and it went all the way to 50. So it pretty much tripled up and some. And now we're hovering a little bit under those highs from just about a week ago. So even though it's very overbought, I'm very curious to see what these earnings are going to look like and how this stock is going to react. And quite honestly, let me see what the 3-year looks like here. I know it was at, yeah, it was at $60 about a year ago. So this might be pricing in very good earnings already, or some positive news that could come out of the earnings call. Because look, if their earnings are not good, this might be dropping, guys, and I actually want that to occur. And no offense, if you're in Lucid, I kind of want this to come back to earth a little bit. You know, if they do report, you know, negative earnings or not the best earnings call or whatever, we get some not too great news or whatever, I think this could end up coming back towards the 180 SMA, whether it be $30 to $35 here on the 4-hour chart. And let's say it explodes to $60 after earnings, that would just put it in even more overbought territory, which we have to be careful about. The next one here is Walmart, WMT. Walmart is pretty interesting right now. The trend is not looking too great, but then again, it's not bad either. We're noticing a double top at about 152, which was that high point from the middle of August. And let me see, was that the all-time high on Walmart? Actually, no, it wasn't. The all-time high was from about a year ago in November of 2020. We hit about 153, and actually, it's good that I pulled up this 3-year chart, because what I'm seeing here is a triple top at about 153 again, which is the all-time high from November of 2020, also from the middle of August, and just recently we got hit at about 153. So that's a big resistance, but we're also noticing that Walmart is uptrending, right, into that resistance. So this one's overall in a triangle. Pretty much ever since 2018, we've been uptrending, and we've seen resistance at 150, 155 for over a year at this point. So the way this plays out, let's say earnings are great. I don't know, maybe they're not, but let's say they're great. EPS, guidance, revenue, all that good stuff. Maybe we end up squeezing out of this triangle. You know, this kind of looks like Lucid, but in a larger, more stretched out time frame. Remember Lucid? We just looked at it. It was in an ascending triangle, and then it broke out and it went ballistic. Well, we might see that occur with Walmart on more of a stretched out basis, like I said. And Walmart's not going to triple or double like Lucid did. But if the ascending triangle plays out, we break 153, 155. Could it go 160, 165, maybe 170? Absolutely. That is definitely possible. So that is what we're going to be watching for this week with Walmart, with their earnings coming up in 2 days on Tuesday at 7 a.m. Central Standard Time. So that is pre-market. Let's talk about Home Depot, HD. This is one that I talked about. I believe it was in my video maybe last week. I made a overbought video, and I still think Home Depot is a little bit overbought here, even though the RSI has cooled off a bit. And I don't know, honestly. Last week it seemed a bit more overbought than what it does now, considering the RSI was higher last week. Now it's a little bit lower. But at this point, it kind of looks like it wants to break out. I'm not even going to lie to you guys. Even though we're pretty extended above the 180 SMA, which is sitting at $350, now we're at about 375. So I guess earnings will tell us what's going to happen. You know, we'll see the price action in 2 days before the market, because they report on Tuesday. Same with Walmart pre-market. So if they report not too great numbers, expect Home Depot to come down to probably 350. That would be a buy zone, in my opinion, right by that 180 SMA, which has been support pretty much for half a year, over half a year at this point. And if they crush earnings somehow and we get a massive leg up, you know, this could probably touch 400 on the higher end, maybe 380, 390. And at that point, it would be very overbought. I would be pretty cautious about touching Home Depot near those all-time highs. And honestly, this same analysis goes with Target, which reports, I believe, or did they report already? No, they report in 3 days on Wednesday before the market. This one isn't as overbought, I would say, because we're a bit off the all-time high. We're about $7 off the all-time high. The Home Depot analysis is actually more similar to Lowe's, I believe. Yeah, look at Lowe's. Lowe's is pretty much at all-time highs. I'm seeing a bearish divergence, and it looks like we're pretty extended above the 180 moving average on the 4-hour chart, which is sitting at 215, while Lowe's is at 235. So we are a good chunk above that moving average, which has been support, judging off these past couple of months, pretty much close to a year on this 4-hour chart. So Lowe's reports on the 17th, same day. Is that the same day as Home Depot? Yeah, no, it's the day after Home Depot, but still, they all report this week pre-market, so be careful. You know, Home Depot and Lowe's, they're a bit extended, you know, they're a little bit extended, and I am noticing a bearish divergence on the 4-hour chart on both of those, but going back to Target, this one's not that bad, as bad, shall I say. I'm still seeing a bit of a bearish divergence on this one on the 4-hour chart, but like I said before, it's still about $7-8 away from the all-time highs. We did break out on Friday. We went up 1.5%. We hit above, or closed above, rather, the 50 moving average on the 4-hour chart. So I think if Target here could maybe take 262 out this week, which has been resistance for close to a month, then maybe we get a move towards 267, which is that all-time high. So if I were to gamble on earnings, guys, based on these charts, I would, out of the 3 Home Depot, Target, Lowe's, I would probably gamble on Target, even though, as you all know, maybe you don't know if you're new to the channel, I don't gamble on earnings. You know, I've done that earlier in my trading career. I've lost my butt. I've made money before, but overall, in my opinion, it's a losing game. You know, gambling on earnings, especially buying short-term, out-of-the-money call options, trying to gamble on earnings. I mean, that's not my game right now, and I'm never probably going to go back to doing that. I can say that with 99% certainty. Sometimes maybe if I want to have some fun, maybe I'll gamble on earnings, but it's not a good strategy. But if I were to gamble on it, like I said, I'd probably pick Target over Lowe's and Home Depot. And the next one here is Nvidia, which has been going crazy recently. I mean, just when you thought it was overbought at 250, it went to 330. I mean, it gained another $80 per share, which is a 25% move, and we hit 327 recently. That was about 4 days ago, calendar days ago. That's an all-time high, and since then, we've pulled back a bit, holding 300, right above that 50 moving average. And if it was a perfect world, if I were to snap my fingers, wave my magic wand, and be like, Nvidia, go here, I would want Nvidia down to 230, right by those highs from August. You know, we would probably hold those highs as resistance, or rather support, and that would be right around the 180 moving average at about 235, 240. That would be a perfect spot for this to pull back to, with earnings coming up on what day are their earnings? 17th, after market hours, so that's on Wednesday. So at this point, it's overbought, guys. It is. It is, but that doesn't mean it can't continue ripping, especially with the hype around the metaverse, with Facebook, their announcement. You know, Nvidia is going to have a huge part in that with their chips. That's why the stock's been going ballistic for the most part. So we have to see what's going on with their earnings call, EPS, revenue, guidance, all that good stuff. So keep your eyes out on Nvidia. If this sees some sort of pullback, maybe we could get an entry point on a swing trade. But at these levels, me personally, I'm cautious, and I'm not going to be touching them above 300. Their shares, Nvidia shares, unless they get under 300 and preferably towards 275, maybe under 275. So keep your eyes on Nvidia. Alibaba, which you guys know on my Patreon where you get all my moves. Alibaba is one that I was buying pretty aggressively, back in August, September even, and I haven't really bought it since the end of September, early October from my memory. My average is right around 180, 175. I bought it from 210 down to about 150, 140, and that's the beauty of dollar cost averaging, right? You're not always going to nail the bottom, and the goal isn't to nail the bottom, especially if you're building out a long-term position. That's not possible, guys. That's why you always have to, in my opinion, scale in slowly and keep cash on the sidelines to dollar cost average in if the stock goes lower. So at this point, Alibaba, we're seeing an inverse head and shoulders, right? Left shoulder, head, right shoulder. And on Friday, we actually closed above both moving averages, both the 50 and the 180 here on the 4-hour chart. And if this plays out in the short term, guys, I think Alibaba, and by this I mean the inverse head and shoulders, if this plays out with earnings coming up here in 4 days, which is on Thursday, pre-market on Thursday, if this plays out, we might be seeing a move towards 180. If 180 breaks, which was the high from the middle of October, also the beginning of September, if those levels break, dare I say we go to 200? I mean, that's where I'm seeing this could end up playing out to. So keep your eyes on the inverse head and shoulders on BABA. They report on Thursday. JD.com also reports this week, I believe on the 18th. What is that? Is that Thursday as well? They report in the morning on Thursday, and this is actually one we called out recently on Patreon when it was trading at about 78, and I told you guys if it breaks 80, we take the highs out from earlier in November at 82. This one's going to be starting to push towards the top of the channel, and now fast forward a couple days, it's doing exactly that. And I think there's more upside, quite honestly, with earnings coming up. There might be some hype around the earnings. Even though some of you guys don't like Chinese stocks, I'm not a huge fan of Chinese stocks to the point where I'm throwing all my money into them. But I think having a little bit of exposure, especially if you have the risk tolerance, it's a decent idea to have a little bit of exposure, in my opinion, considering the Chinese companies are still growing. Even though the CCP, we can get into that rabbit hole, which I'm not going to do that in this video. That's a big risk, don't get me wrong. But I still think for me, being a guy in my mid-20s, hey, I think it's a decent opportunity, right, to have a little bit. But anyway, look, it's at 86 bucks right now. We're testing the high point from the middle of October, about a month ago, which was around 86, 87. So if that breaks, I'm going to put my alert at about 86.25, maybe. Should I put it at? Let me do that now. 86.25. We might be making a move towards 90. So watch out for JD. Cisco CSCO is another one. They report earnings on the 17th, so that's on Wednesday after market hours. And Cisco's chart, honestly, it looks pretty good. We're noticing it's kind of in a wedge. You guys see we hit an all-time high, or a high at least on the 4-hour chart. I'm not sure if it's an all-time high. We hit that at about 60 bucks back in August, end of August, and we've pulled back since then from 60 to about 52. And since 52, which was in the beginning of October, we've been riding back up. People bought the dip. I didn't buy the dip, but people did. And it's been riding the moving averages. And just recently, we've gotten a golden cross, which is bullish. We hit almost 60 bucks again, but now we've been pulling back towards the high 56s. So, in my opinion, there's breakout potential here from 56 bucks towards 60 plus. Very possible. So, with earnings coming up on the 17th, I'm going to put my alert at $57, right? Right towards the top of the wedge. If that breaks, we're probably going to be off to the races on Cisco. Maybe back to 60, 60 plus. That's very possible. So let's go over a couple of more before I do wrap the video up, guys. I have 2 more, so bear with me. Hit the like button if you haven't done so already. And if you aren't subscribed, what are you doing? Subscribe, hit the notification bell so you're notified every time I do make a video. So into it, if I can say it right. Which is a pretty interesting company name, guys. I think that's catchy. One of the more clever company names out there. Intuit reports earnings this week as well, ticker symbol INTU. They report on the 18th, which is on Thursday, after market hours. And this is one of those stocks that has just been going berserk, especially the past couple of months. You can see back in March, it was at $360 per share. Now it's trading almost double that, towards the mid 600s. I mean, you can't make this stuff up, guys. Some of these stocks are going crazy. And on Friday alone, buyers, just when you thought it was overbought and it wanted to fill the gap down to 570, right by that 180 moving average on the 4-hour chart, just when you thought that, buyers stepped in at 610 and drove this thing up another 3%, up $20. Now it's $5 shy from the all-time high of $631 per share. So Intuit is looking great. I mean, it's not the best, in my opinion, risk reward right now, considering we're so close to those highs. But if we do break 630, even though it's pretty overbought here, and we're not necessarily seeing a crazy bearish divergence, you know, if we break 630, this might see a leg up. Who the heck knows? With earnings coming up on the 18th, you know, there could be upside there, believe it or not, guys. And if we sell off maybe down to the mid-high 500s, that could be a decent dip buy as well. And the last one for today is ROST Stores, ticker symbol ROST, which is one of those companies, guys, that honestly, I don't think will ever go out of style. You know, Ross, TJ Maxx, discount shopping, you know, that is always going to be important in my opinion. And me personally, you know, I shop at Ross and TJ Maxx all the time, and those stores are always packed. Have you noticed, if you go to TJ Maxx, if you go to Ross, the lines, at least where I'm at, for the most part, you know, sometimes if you go at off hours, whatever, they're not that packed. But the lines are always, for the most part, very packed. And their checkout line, it's zigzags, you know, and there's like 15 cashiers there working, you know, maybe not 15, but at least 10, 8 to 10, which is crazy considering a lot of places of employment right now, they're understaffed. So I think Ross is pretty good. You know, this is kind of you know, not saying we're going to a crazy recession, but if we were to go into a recession, a crash, you know, Ross is one of those recession-proof companies, in my personal opinion. And with earnings coming up here on the 18th, after market hours, yep, the 18th, I'm watching what their numbers are looking like very, very closely, actually. And this one's pretty much down $20 from the recent all-time highs, which is about 15%, so it's in correction territory. And let me double check. Is that the all-time high? Yes, it is. Yes, indeed it is, guys. What stocks aren't near all-time highs at this point? I always say that in my videos. But at this point, Ross is trading within this downwards channel, and we sold off a bit last week, and we closed above both moving averages. So I'm really curious to see if buyers step in, push this above 120, mid 120s. That is where I think a big breakout could be coming on ROST Stores. So I'm going to set my alert at 120 and watch what it does from there. So that's pretty much it, guys. We covered a lot in this video. Lucid, Walmart, Home Depot, Target, Lowe's, Nvidia, Alibaba, Cisco, JD.com, Intuit, and ROST Stores. Those are 11 stocks that I'm watching for this week. And who knows, maybe I'll play some of them. We'll see. All you guys in my Patreon obviously will get those alerts. So if you guys found value, hit the like button, subscribe, leave me a comment, and check out my Patreon. If you want all my buys, sells, call-outs, morning update videos, all that good stuff, you get all that on Patreon, or you can go, it's linked down below, or you can go to stocksurfest.com/Patreon. Make sure to also get your 50 free bucks from M1 Finance, which is limited time. All you have to do is use my link, deposit 100 bucks. We each get 50 bucks, and you guys could check out my Webull link for 2 stocks up to $1,600. Simply deposit 100. We each get 2 stocks up to $1,600. All of those are linked down below. I'll catch you guys in the next video, which I'll pop my M1 Finance YouTube portfolio update video from yesterday up here. If you guys didn't catch it, go check it out, watch it. Let me know your thoughts. I'll catch you guys there. Thanks for watching. Keep crushing the markets. Stay safe out there. Peace out.